Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Saturday, the 8th of June. Starting off with the FTSE 100, which has managed to maintain the floor of that rising trend channel from back in February, 8240, the nominal level there. Had a little probe below 8240 in the aftermath of the American non-farm payrolls, but bounced back, which is relatively impressive, but still need to get that end-of-day close back above 8300 to give us a chance of resuming the recovery that this market has had, or breakout in fact, since back in February. The top of the channel there heading for 8700. We're looking for that if everything goes well by the end of next month. Otherwise, judging by the RSI configuration, which is a double failure at that former uptrend line, we have the risk of a test of the 50-day moving average there at 8150 before then we then push higher again. Moving on to the DAX, and here also a slightly tricky situation. We've got the floor of that rising trend channel from back in October and the 50-day line supporting this market, 18,300, but we need to break that line of resistance from last month. That's at 18,800 on an end-of-day close basis to give us a chance of a move towards 19,800 by the end of next month. Worst case at the moment would be a test of the 18,000 area, which is basically late April and early May support for this market. RSI just about on the right side of neutral 50, so that suggests that we still have a chance of breaking through that 18,100 area rather than breaking down. The Dow is next, and a bit fiddly here with the non-farms rather queering the pitch. We had an end-of-day close for the market above the 50-day line on Thursday, but back down below it for Friday. We did actually feel that there was a risk of such a scenario given the way that the RSI has remained below neutral 50. It's 47 at the moment, and you need both an end-of-day close above the 50-day line and an end-of-day close for the RSI above neutral 50 to snap the idea that we'll have to test the floor of that rising trend channel from the autumn, 38,200, the level there. On the upside, above the 50-day line, looking for 40,000, and best case would be up to the top of the channel there from back in September, 41,800 by the end of next month. But obviously, at the moment, that feels like that might be a long way away. On to Bitcoin, which unfortunately was dragged down by that non-farm type of aftermath. Here, got that neckline resistance there, 72,000. Want to see an end-of-day close above that to give us a chance of a move towards 90,000 by the end of next month, or at least the mid to upper 80,000s. On the downside, the floor of the channel there around 65,000 and the 50-day line, and we want to hold that double support area ahead of a potential break to the upside. But the overall pattern here since March looks like a complex inverted head and shoulders, so we're still betting on a push to the upside, especially given the way that the RSI is still above neutral 50 at 55. On to gold, where the chart's a little bit out of date in the sense that closed around the 2285 level. We broke back down below the 50-day line there at 2350, and below that we're factoring in that we would have to test 2280. I think the low on Friday around that level, maybe 2284. But as long as there's no end-of-day close back below the floor of that rising trend channel from December, we can avoid maybe a worse fall down to 2200. Still looking for that push through the 2400 area to give us 2450 plus. And best case would be by the end of next month up to 2590 at the top of that rising trend channel from back in December. Moving on to the stocks, and starting with the Aquis market, which I'm obviously very loyal to. Here you can see that Ananda has made good progress on bouncing off the floor of that triangle, as we were suspecting it would do. Bear trap rebound from below the November support there at 0.25, and above that looking for 0.4 pence, perhaps as soon as the end of this month, getting the shares back to where they were at the start of the year. The other point to note there is that there was a gap down there last month, so an end-of-day close above 0.31 would be a gap close buy signal and could give us much more than 0.4 over the near term, but ideally no end-of-day close back below the 0.25 level on a mid-close basis. Moving on to a stock which looks as though there may be some, I suppose it could be Ananda Mark II with a bounce off the floor of that broadening triangle, in this case from November. Initial target here to fill that gap up to the 6.1 pence area. Best case would be up to 13 pence by the end of next month, although I have to say that, I have to admit, that does feel as though it's a long way away. Probably more realistic is a move back up towards the May resistance, 7.4 pence, while we're above 4 pence. Moving on to Blue Star, which has been, I think even its biggest fans would admit it's been a bit of a dog in the recent past, but good signs of life at the moment. Breaking neckline resistance in the 50-day line there at 0.03, and above that we're looking for 0.052 by the end of this month. Best case would be to fill that gap up to 007 and hit the 200-day moving average, the black line there, by the end of this month. So maybe something positive going on there. The other point to note, which is quite important, is the way that that 50-day line is rising. We have seen the 50-day line rising as one of the best indicators of a return or a turnaround in the trend for a stock in a bear run. So let's hope that that works for Blue Star. On to Cadence, and here you can see that the shares are creeping along the still falling 50-day moving average. That's around 4 pence. Ideally, we stay above recent neckline resistance, 3 3/4 pence, and above that, looking for the shares to at least hit 5 pence plus by the end of this month, at the top of that falling wedge that they've been in. Maybe we have another touch of the 200-day line, 5.4 pence, as we did back in March. Next contender is a stock I haven't looked up for a while. It was hot at one point, maybe during the pandemic, but another situation where with critical mineral resources, we have a potential rising trend channel base, top of the channel there around 1.8 pence, which is not much on the upside, but feels like paradise compared to where we are now. Once again, the 50-day line rising, and we've broken the old May resistance of 1.4 pence, so sort of double signal there that we are turning around, and best case would be by the end of next month that we hit the 200-day line at 2.6 pence, which also ties in with the old August to February support around 2 3/4 pence. On to Corcel, or Corcel if you want to call it that. Here we've got a situation where there's a possibility of a turnaround after the woes that the shares have been in the recent past. Probably want to see an end-of-day close back above resistance on the way down. That was at 0.17, so maybe that's the level to look out for. If we can do that, then it could be back up to the May peaks at 0.4 pence by the end of next month, but it has to be admitted that is a bit of a long shot, even by Bulletin Board Heroes standards. Essensys is next, and here the shares have done us relatively proud. We were looking for a trend line break there around 17 pence. Above that, we're looking for the 200-day line, 28 pence roughly, let's call it. So we've done that, and above 28 pence on an end-of-day close basis, looking for as high as 45 pence by the end of this month. Obviously, the 50-day line, the blue line there, rising already. Just waiting now for the 200-day line to rise, and that might suggest that we're in the run-up to a golden cross. Ideally, there's no end-of-day close back below the range of the last two sessions, around 25 pence. Next up is Eco Buildings, which has, well, we're sort of upgrading it now, where we were looking for the shares to hit the top of that falling trend channel from October, around 13 pence, but an end-of-day close above that early next week could give us a top of November triangle target as high as 16 pence by the end of this month, and that would be quite a decent change for the shares. Just the other thing to wait on, I suppose, is the 50-day line rising, which I suppose if you look closely, it is doing that already. Eneraqua is next, and here another potential turnaround situation after a massive gap to the downside. We've already got the 50-day line rising. We've had decent blue candles over Wednesday, Thursday, Friday. The price action very strong. Had a gap close buy signal a week or two ago as well. There was a gap down, and then we closed that gap on the 24th of May. So it looks like everything positive going on here for a move towards at least 55 pence and the top of that broadening triangle from back in the autumn. If you're a fan of the shares and looking for greater glories, then it could be that we are going to head as high as 80 pence by the end of next month at the upper parallel of that broadening triangle. But let's just see if the shares can remain above the recent or post-March resistance around 44 pence before we get too excited. On to one of the stars of last week on no news as well, which is even better. Here, We had Eurasia coming up with the goods. It was suspected that there was a change here with the shares holding above the 200-day line for the first time in over 2 years. I think they haven't been above that 200-day line. You can see there since January, February 2022. So to turn around like that and break the trend was amazing. Current situation is that we're looking for a move towards, well, we've hit all our targets. 3.1 pence was the high target there, and looking for a fresh target here. Probably the obvious thing to do would be to think that we'll hit the top of that, the upper parallel of the red resistance line target of 3.1 pence and get up to as high as 4.75 pence sometime during the course of the rest of June. But the key here is staying above 3.1 pence, and obviously many of the rallies here have been 1 or 2 day wonders, so it is still a work in progress for the bulls. Helix exploration is next, and one of the best IPOs of the year, I suppose. European green transition vying for it as that as well, but rising trend channel here since the beginning of May. Top of the channel there, heading for 32 pence, and we're looking for that as soon as the end of this month, especially while we remain above the floor of the channel at 21 pence. 21 pence or 22 pence was the resistance back in May, and hopefully that will become new support ahead of a move to the low 30s by the end of this month. So great situation on that one. MetalNRG is next, and here we've managed to change or snap the recent negative trend in the stock, and what you can see here is a bull flag way above previous resistance after the unfilled gap to the upside. So there's two very strong signals. It looks like a mid-move consolidation ahead of a move to the upside, and the initial upside here would be up to 0.21 pence, hopefully over the next week or two, while we're above 0.14, which was also the resistance area on the way up. We also had a golden cross in the middle of last month, so plenty of positives here for MetalNRG. In fact, it may not be too early to suggest that there could be an extra move by the end of next month up to the line that I'm drawing at the moment into the upper 20s, but maybe it's better not to get too excited too soon. Mosman has also done us proud, which is always a good thing, I suppose. The shares have managed to hit a second target, actually, it probably was, the line at 0.33. After that, an end-of-day close above 0.33, and we're looking for the red resistance line projection from July as high as 0.46 as soon as the end of this month. Ideally, we stay on the right side of the old January resistance, 0.29, ahead of the move to, or potential move, to 0.46 by the end of this month. Pretty decent price action there with the two gaps there that we've had, and a gap fill rebound on the 4th of June as well. So very nice setup there on Mosman. Sondrel is next, which is obviously not for widows and orphans. It's probably created a fair bunch over the recent past, but looks as though we've got a rising trend channel base. The black line's there, target there around 8.5 pence. We're looking for that while we remain above the 50-day line at 5 pence. If you're cautious, you wait for that red line there from February to be broken around 6.5 pence. But the best case scenario here would be up to 11 pence by the end of next month. Obviously, that is a technical view, not a fundamental view, but the fact that we gapped up back last month in May and weren't able to fill that gap is a very strong signal. New name for the Bulletin Board of Heroes is next, and it is Thruvision. Here we've got another Ananda type turnaround, broadening triangle base. Top of the triangle there at 22, which we're looking for by the end of this month. We already had a gap close buy signal at the end of May, and in fact, Friday's close basically closed the second gap down as well. So above 18 pence, looking for 22 as a minimum on Thruvision over the near term. Another first, I think, is TheraCryf, and here you can see another broadening triangle base. Top of the triangle there, 1.3 pence. We're looking for that while we're above, at least while we're above April resistance at 0.86. Ideally, the worst is that we would stay above 0.77 in the 50-day line, but if we're really lucky, we will stay above that old April peak. I think the only thing we're waiting for again is for that 50-day line to start rising, which I suppose it already is.